Welcome to IA Talks Innovation. On this episode, we're doing Miranda's Musings. Now, if you're part of the IA, you're already very used to Musings by Miranda, but this time it is for our guests at this podcast. I'm joined by my co-host, John Allen. You've seen enough of us. But today we're sitting down with Miranda. Many of you will know her as IA's Director of Market Insight and Fund Sectors. Miranda's insights have shaped industry for years. And we're here today to pick your brain, Miranda, on all things trendy. But not in the world of Milan and Paris. This is the world of investment management. From headline findings in the latest investment management survey, please go check that out. It was released just this week, to the big predictions and product innovations shaping 2025. Welcome, Miranda.
Thank you very much for having me. I will endeavour to try and make this more interesting than the latest Fashion Week musings, but markets are interesting. So I'm looking forward to having a good conversation, particularly at the moment where we're seeing so much speculation about what might happen in the US. So
amazing. Well, Miranda, for listeners who might be new to the investment management survey, maybe we can start, if you could slightly explain to us, what does the IMS actually look at? What is the scope of that report? And why is it such a touchstone for the industry?
Well, thank you for the massive plug for the Investment Management Survey. It's a really, really important report for us. So we collect a lot of data from IA members, so the leading investment management firms in the UK, but all shapes and sizes. And what we're trying to track really is assets managed from the UK and how those are growing. So what the IMS does is it provides a lens on the UK industry and particularly on portfolio management. We're a real centre, a global centre for portfolio management in the UK. So how can we protect that and actually accelerate in an area where we do compete? The US is obviously the biggest market in the world, but it's a very domestic market. So the UK is right up there. And we've just published a report this week with our headline data. I won't give it away now because I imagine that's your next question. But it is something that people look out for. And the team, particularly Sarah and Hassan, but also my team, Richard and Ellen, work incredibly hard to deliver it. So we had some donuts to celebrate. I don't know what that says, but sugar is always good, but it's always great to get it out, I think, is everyone feels very happy once that occurs.
And there's such a lot of data in there, Miranda, isn't there, because of the significant number of data points that you ask IA members to contribute. But let's start at the top. What do you think are some of the headline findings from the report this time around, and where do you think the industry is heading trend-wise?
So, I mean, it's been a really interesting year this year. And actually, what we've seen is we like to think about the period post the global financial crisis as a cycle. And that cycle ended in 2021. And we moved into this period of rapidly escalating inflation and very significant market volatility, particularly as a result of the Russia-Ukraine war. So 2022 marked a 12% fall in UK assets under management. And what I think has been so interesting this time is we've seen that period of significant change for the industry, but actually through 2024, we returned to growth. So we actually, assets under management grew by 10% up to 10 trillion, which is a record level. So we've managed to get back to the level that we were in 2021 and exceed that. And that shows that even though we don't have an environment of ultra low interest rates like we did before, even with interest rates in the UK at around 4%, and obviously we're managing assets across the world on behalf of both UK and overseas clients, we're still managing to grow our industry again. And so it's that resilience piece, I think, is a really important finding. And it's great to see because, quite frankly, I'm sure we've all, we're all looking for some more positive news after those tough 2 years. So that's been great. A couple of other points, if I may. So one thing that we actually look at, and I talked a little bit just now about the fact that we're very international as a market, we look at the proportion of assets that we manage on behalf of overseas clients and compare those with assets managed on behalf of UK clients. And this year, for the first time ever in our data, overseas clients now make up a larger proportion of assets at 51%. Now, I wouldn't have predicted that a few years back. We have had to go through exiting the European Union. We've had to look at how we kind of protect and grow our European client assets in a market which was our biggest overseas client market. And this year, what we've seen is actually assets managed on behalf of European clients now sit at 3 trillion. So that's gone back to, again, our pre-2022 figure. So we've recovered and grown that, which is great to see. But we're also seeing growth in other markets like the Middle East, actually Latin America this year, but albeit from a low base. So that's really important. And then the final point, because I know, there's lots that I could talk about, but the other thing that I just wanted to pick out was the balance between institutional and retail client assets. And when we break that down, if we look at the different client groupings within institutional, traditionally we'd be managing the largest proportion on behalf of pension funds. That's actually changed now. So retail clients are the highest percentage in our data at 27%. Pension funds are 26%. And so that speaks to some of the shifts that you're seeing. Institutional is still a massively important market for us, but actually it is evolving. And as we start to see DB schemes wind down or move to full funding, move into a pension transfer, market type arrangement, de-risking, that is shifting the balance of assets. Some of that is kind of showing up in our insurance clients, but we've also seen the growth of retail since the pandemic. And so that's really been reinforced by this year's report.
Great. That's some super interesting stats. And as somebody in the market for a remortgage myself, I'm keeping very nervously my eyes on any shifts there. This year's report, and I've really just skimmed through it just yet, delves on 3 key themes. And one of them is, of course, retail participation in the UK, which is broadening. There's acceleration of technological transformation and an overall support for UK economic growth. These themes sort of have emerged, and they're slightly different from what emerged previously. Why do you think these are important? And could you give us some more color around why do these matter to the UK markets today?
I will try to. But on the interest rate and mortgage point there, I love talking about interest rates, as people who have ever listened to me at the IA know, but it is quite an interesting environment. Will they cut further? I don't think the Bank of England is going to cut further this year. I think they're going to see, they want to be ultra cautious, but as we know in the US, there's a lot of pressure from a certain president to cut rates. So it's a fascinating environment. And it does have an impact on our industry and markets, as we know. But if I turn now to what you were just talking about, which is why do we pick out those 3 themes? Well, really, it's not us picking those themes. Every year we have the privilege of actually being able to go and speak to IA board members and members of our advisory council, so really senior people in the industry, and we get together what we think are interesting questions. But a lot of it is led by what they are seeing in their businesses and what they think is significant for the industry. And these themes really stood out to us. We also talked, I have to say, a lot about geopolitics and markets, and you'll see some of that in the report, but that chapter is looking at what we think are transformational trends. And I think, and that's why we started with technology, actually, because we are really seeing in an industry where often we're described as maybe being a fast follower or needing to innovate more, we are seeing a lot more innovation. People, and as you know, as you this is your bread and butter, what you look at every day with our members. But we break that into 2 key themes. One is around looking at AI and the transformational opportunities with AI, and firms are moving now. So this is happening across the industry. And in particular, obviously, there are operational efficiency savings and lots going on there. But I think it's really around the power of magnifying amplifying the potential of investment research and supporting analysts to really crunch huge proprietary data sets, actually. So really focusing on actually that internal proprietary data knowledge and how that can then be significantly amplified by using AI, but in tandem with humans, human brain power. So that is happening now. And then the other aspect that we talked about is perhaps something which is kind of, I would say senior leaders see as 5 years out maybe, but the transformational opportunities around tokenization. And, certainly a lot more people starting to kind of buy into this idea that tokenization could transform the infrastructure surrounding how funds are distributed, how they're held, obviously, the kind of governance contracts around funds, but also thinking about some of the opportunities in particular areas. And we talk about the very interesting examples in the UK, but money market funds in chapter 2. And then what people think about the opportunities around tokenization of assets as well, and some of the risks that might be involved in that too. I think people are quite clear-sighted that there are opportunities there, but there are also potential risks that we need to be aware of. So absolutely fascinating. The final piece on tech, if I may, is also the opportunity around the personalization piece and mass customization, which really links to that third point in that chapter about the acceleration of retail investing and how that will evolve. And I think those two are inherently linked, because if we can offer a personal experience and service, both from our perspective in the product piece, but also from a guidance and targeted support perspective. And if you add AI into the mix, I'm sure there's no stopping us. What we could offer to someone in 5 years' time could be significantly different to what we're able to offer now, and is incredibly exciting, I think.
So as well as that technological innovation, as you say, there's opportunities to innovate within the product set. So what are you seeing around the innovation in terms of the split between active and passive management when we consider the rise of active ETFs, thematic strategies, and even crypto ETNs, which are now available to retail consumers in the UK? So in terms of product innovation, how do you see the UK positioned at the moment, and what are members saying to you about that?
I think, so product innovation is an interesting area, because I think for a long time people felt, well, we've got the product set. It's more about how we get that to market and how we engage people. And actually the innovation was kind of happening around engagement and distribution. And I think, as you say, that is starting to shift. And obviously, as a key part of that, tokenization has a role to play. And that's partly on how do we unlock opportunities for investors in both the institutional and the retail space for different types of assets. So you talk about active versus indexing, which has kind of been a very significant trend. So OMS shows that 35% of the assets that we manage run as indexing strategies. In the fund space, that's about 28%. People that you talk to believe that will get to more of a 50-50 balance, because the low cost products have been very compelling, particularly in retail. And in 2024, we saw a 28 billion inflow into index trackers, which is a record. And I'm not including ETFs in that. So you don't have fund data, UK investor fund data on ETFs. So that trend is here to stay. I think that, indexing is an important part of the asset mix. The question for active is, in a more volatile market environment, can active really show its value by actually being able to respond to changing market dynamics and outperform? If you've got an indexing strategy, it's going to follow the market, and that could be downwards. Whereas active, there is the opportunity for active managers to really prove their worth. And the question is, can we deliver that now? But, I think going back to that point about what we're here to do, we're here to offer long-term, sustainable, risk-adjusted returns for our clients. And in order to do that, we need to provide them with a rich toolkit of investment products. And I think that's why certainly you're starting to see in the ETF space the rise of active ETFs. The ETF is a wrapper. You can have active strategies within that. And that's something where that's hugely accelerated in the US. We're starting to see significant growth in Europe. Some of those strategies are not active in the way that we would think about active, potentially the stock picking strategies. Some of those are kind of quantitative or algorithmically driven strategies, what we call smart beta, which is kind of, providing an indexing return with a bit extra on top. So I think it will be interesting to see. I mean, we've seen developments in Europe now where you are now seeing ETFs that can kind of they're able to mask their positions for a little bit longer because, if you've got an indexing ETF, you have to publish every day your kind of weights and positions. So I think that's interesting to see how that emerges and some of the kind of innovations coming through there. But as you say, I mean, ETFs, so they have intraday pricing. There are some significant advantages there. And actually, when you're seeing innovation like the crypto ETN, people are using those structures to deliver some innovation as a modern product. So I think it's interesting to see how that will develop. And then obviously you're looking at things like, that kind of thinking about the crypto world, you guys are a lot closer to it than I am in many ways. But I think it's interesting some of the dynamics around the opportunities for money market funds versus stable coins and how we can deliver that yield to investors. And certainly in the US, actually I was at a kind of round table the other day where a US participant was talking about the fact that people in the US don't use cash. Cash savings accounts, well, no, they use money market funds within an investment account. It's a totally different culture there. And so what will we see in the UK where we don't have that reality, but we could actually, help to provide more visibility to money market funds and to improve take-up there? I think there's some interesting opportunities.
There are. And in the market recently, we've seen the launch of a product that is a debit card that draws down on a money market fund. So you can effectively use the MMF as a bank account because of its very short settlement window. So that's a new innovation that we're seeing within the market, and it'd be interesting to see how that develops. Now, as well as the survey, Miranda, you've done some extensive work on ETF research recently. So let's dive into that a little bit more. You've identified that there's been a significant surge in adoption, especially among demographics like higher income investors and younger people. So what would you say is behind this shift? Is it just a more modern interaction method, perhaps, or is there more to it than that?
I think part of it is, as you say, that people are coming into investing through different routes. And some of the platforms that they're using are trading platforms where they might have been trading other types of investment products. I know some people don't want to think of crypto as an investment product, but actually, if you're a young person going onto one of those trading platforms, you'll be seeing cryptocurrencies alongside shares, alongside ETFs, for example. And actually, I think some of the research that we've done in the past would suggest that once people get to a certain amount of money, they know the risks of crypto. They know that they could lose everything. And that's when they start to think about funds and the diversification benefits, that collective investing, that being a better place to put their money. So I think it is, to a certain extent, about people finding new routes in and then looking at the products that are available through those platforms. And that's why what we see in the data is about, when you look at ETF investors now, 68% are men. So clearly we've got some work to do to actually engage women, because in the investor base, yes, it's still 2/3 men, but actually one of the great opportunities is to get more women into investing, and why shouldn't they be using ETFs? They do tend to be higher income and more metropolitan, so 25% living in London. But what we also see is a gap in older age groups. So only 17% were over the age of 55. And some of what the research is telling us, I think, is that if you're a buy and hold investor with long-term aims around retirement, you may not see at the moment that ETFs are a product for you, because you see them as something that people who are comfortable with trading, who know about trading platforms, use. And I think that's wrong. It is wrong. You can absolutely use ETFs to buy and hold. And actually, what probably a lot of people don't realise is they may be holding ETFs within a multi-asset fund, but they just see the kind of, the headline fund. Yeah. So we've got some work to do, I think, to help people understand both the reasons that they might want to use an ETF, but also to understand what some of the risks are. They do need to kind of understand some of the dynamics around trading so they can have better information and actually take full advantage of the investment toolkit available to them.
Brilliant. Thanks, Miranda. You spoke a lot about, obviously, trends you've observed, but I wanted to put you on the spot a little bit and get you to do some bold predictions. But if I can sort of dial back a little bit, because you do this every year, the IMS. When was a time, if the UK has been through Brexit, COVID, name it, and we've had it in the last, every year there's been something, and hopefully no more. A time when you made a prediction that was quite unlikely but turned out to be right. So what was your I told you so moment?
My I told you so moment is, this one's for Jack Knight. I remember us having a conversation at the end of 2021 where he said, I think this inflationary period is transitory. And I said, I don't think it is. I think this is serious and we are going to see a real shift now. And I'm worried. And, I'm not claiming to be some of the kind of expert talking heads, my favourite, but my favourite people to listen to, people like Stephanie Flanders or Karen Ward, when you listen to their super interesting predictions. But we did move into a really significant shift. And that's where we saw central banks having to combat that by raising interest rates around the world in developed markets. And that dynamic has really changed, the period over the last 3 years. So I told you so, Jack.
And what predictions have you made in this year's report that you think would surprise people potentially?
Long pause. It's so hard. Look, it is really hard to actually, at the moment, one of the most interesting points that came up in the conversations with CEOs actually was how difficult it is to look ahead long term. People are almost taking it quarter by quarter, because when you look at what happened in April with the tariff announcements, if you took as read what Donald Trump said he was going to do, then you can make a prediction based on that. But, 10 days later, he said, actually, I'm going to have a stay of execution of 90 days. So, and then these markets, I'm going to reduce their tariffs. And then, now we've got another situation where he's looking again at China and what tariffs, that he might put 100% tariffs on China. And actually, in an environment where markets haven't responded to kind of lots of things that have been going on, including what's going on in the US with the deficit and, inflation figures, they did respond to that. So that's why it's so hard. Because if you are basing a prediction on something, you might find that from a kind of political perspective, 10 days or a couple of weeks later, that actually there's been another shift. And it's not just in the US. If you look at what's going on in France, Sébastien Lecornu resigns and then he's reappointed. And what we can say there is that actually, again, the bond markets are looking, taking it in view of that because of the lack of a credible government, the risk premium that they require to lend to the French government. So it does feel hard at the moment, which is a bit of a cop-out, isn't it, when I say that? I guess one thing that we do predict in the report is that, even though we're in a moment where there's a lot of volatility in markets and uncertainty, our sense is that this momentum that we saw during COVID around retail investing, that there is a real opportunity in the UK to actually take hold of that and to help people think that investing can be for someone like them. And obviously we all, well, I hope most of us will have heard that the retail investment campaign, announced by the Chancellor in the Leeds reforms. And I know that there is some worry about doing this campaign at a time where markets are volatile, because what happens if you push a lot of people into investing and they see their money fall? But what I would say is that if I look at the kind of big groundswell of people coming into retail investing recently, that happened during COVID. And so we see, I think it's about nearly half of investors in our ETF survey came in during COVID. Now, they've now experienced 2022, which was horrible, because I remember looking at my portfolio thinking, my God, it's like 20% down. And no matter how good your nerves are, when you see that in your kind of investment account on your platform, you'd have to be kind of almost, I don't know, the coolest of customers not to feel worried by that. But I just thought, well, I've just got to leave it, because that's what people are telling me. And I know that. And I think what our industry has got better at doing is really communicating with investors, holding their hands, telling them, now we've got people saying that retail investors are buying the dip. They're actually acting as a counterbalance to kind of momentum factors in markets. That's a kind of systemic risk piece in some ways, that they're helping to balance that out. So we're seeing that investors are starting to understand those dynamics, starting to understand that volatility only matters if you get out at the bottom. And so there's never going to be a perfect time, because markets are not static. I do think that all of the information that we have now, all of the opportunities to reach people, that the changes coming to regulation, we've got such a once in a generation opportunity to really change the dynamic there. So that's my prediction, is that we're going to do it. And then you can tell me in this podcast, in Miranda's slightly more doddery market musings, whether I was right.
You were right last time, so we'll just go ahead and...
On one thing, I didn't tell you all the things I've been wrong on,
I just have to check what Jack thinks, and as long as it's
check
just
if Jack remembers that conversation, Shooty.
Super. I guess finally, just a more slightly emotional question, I suppose, and it's coming from a more personal point and a view that your team might share with you. When you write this IMS every year, it's a huge responsibility, a lot of data points, deadline to crunch on. What keeps you up at night? Is it the numbers? Is it the analysis? Is it something else?
Yeah, apart from actually physically writing it, which can sometimes keep us up at night. And I'm sorry to the team who do an incredible job. I cannot say how difficult it is to kind of collect data in from all of our members, sense check it. Not all of it is always right. There's a huge piece of work that goes on there. And then also the interviews, making sense of those, putting it all together, knitting it together in a story as well. I mean, data, just pure data is great, but actually people remember the story, the narrative behind what the data is telling us. And so putting all of that together is a massive piece of work, and they have done a super job as ever. I think what keeps us awake at night is probably getting it wrong, but putting data out which is wrong, because we're the best one in the world. We have lots and lots of checks, but, it does happen sometimes. I mean, thankfully, our quotes are anonymous. So if we have misquoted anyone, at least no one will know who we've quoted. But that is also not something that we like to do. So I'm sure we've all kind of had, and just getting it over the line, I think towards the end, you just think, I just want to get it out. But, with a little bit of distance, hopefully we can look at it and go, yes, that's another good piece this year. And how can we improve it next year?
Brilliant. Thank you so much, Miranda. Thank you all. Clearly, France's Hotel California, you can never quite leave. And thank you for all of those statistics and producing this report every year. It was the first thing I was asked to read by John when I joined the IA. So,
and did you read it, Shruti?
I tried my best to read all
pages.
of it. But yeah, thank you. Thank you so much. And see you soon.